In this video, I'm going to be showing you how to trade one of the hidden gems in the market. If you're wondering what that hidden gem is, it's flashing on my screen right now, and it's gold, also known as XAUUSD. A lot of people, when they go into the Forex broker or binary options broker, and they look for something to trade, they're often thinking, okay, let's do some Forex pair. Or maybe the latest catchphrase is cryptocurrency. Do you know that gold is one of the most underrated assets that you can possibly trade? Okay, and I'm going to show you why in this video. Like, this is a non-farm payroll Friday, and right now the price is like rocketing, and in the next trading day, it's probably going to have a big correction. I've been observing this pair for quite some time. One of the ways to observe it really is to go onto like a 4-hour chart. When you go on a 4-hour chart, there are some times that you will notice huge motions happening, and that would be like the huge spikes down or the huge spikes up, and almost instantaneously it comes back around. And that brings us to the point as to why gold is one of the hidden gems. It's because gold is a smaller market cap than things like Forex. For example, we know that Forex is a multiple trillions per day kind of market. I mean, you put everything together, but gold on the other hand is a smaller market, and at the same time, the best part about gold versus say like any cryptocurrency or Bitcoin or Doge or whatever is that if it goes up, it'll come back down. If it goes down, it'll more or less come back up. The reason why this even happens is because if you look into the longer scale of things, people have been trading gold for years, I would say decades, before our lifetimes. Even one idea for people who trade Forex is that if you want ever to do like a grid system, this is one of the perfect pair. Why? Because any amount of time can pass, but it eventually still stays at around the same. It doesn't really change in price. But the same cannot be said about cryptocurrencies. For many cryptocurrencies, if it goes up strongly, it's never going to come down. If it goes down strongly, it's never going to come back up. The best way I found out to trade gold is to trade it when the market is being manipulated. How do we spot the opportunities for market manipulation? Anytime where a lot of movement takes place within a very short period of time, in comparison to what could have previously taken weeks and months to achieve, that is market manipulation at work. And the reason why that is, financial institutions that are long-term bullish in gold, they just want to press down the price and then be able to buy in more volume cheaper. Unlike Forex, it takes a lot to really move Forex, but in gold, just with some consolidated effort. What the whales do is that they look out for situations where everyone is tentative. They're just waiting for some sign of action. Some whale will drop some crumbs and result in the whole market going into a frenzy, just following the leader, just selling. Sometimes all it takes is a little bit of a short candle, but if that doesn't work, they sell more, and once that does, the momentum picks up. Step number 2, trade the recovery. This is the easiest way to trade market manipulation in gold, to trade the snapback action. The snapback can be done whether you're trading in binary option or you can trading in spot. The key is to wait for it to run out momentum and to wait for the first green bar to appear. The green bar that appears needs to be an engulfing bar. Before that, there should be a shortening, bearish candles or bullish candles in an uptrend situation, and there will often be a very long spine on a candle. Look out for the green bar that engulfs that. That basically tells you that we're ready to go the opposite way. But of course, we're not going to go in blindly, because going in blindly, it's going to cause some trouble when you eventually take the trade, because when it goes up by too much, well, if you're trading in Forex, no problem, you just need to wait. But we'll always want to talk about entering at the best possible prices. So notice that gold is highly volatile, and the spines on each side can be very, very extreme. In a situation where you're supposed to be riding on the way up, use functions like a limit buy, and that's going to help you. Whether you're doing this in binary or in Forex, there is a limit buy option that can help you to get into this kind of trade better. And if it is a situation where you're trying to take it back down, use a limit sell. Limit sell or a limit buy basically means the price is to get there first, and then the trade will go the other way around. So the trade is then engaged and then ride it down. What kind of expiry to use? What kind of profit target to expect? Well, in Forex, it's very easy to just target for 50%. A 50% from the time the drop, okay, and that's the easiest to go for. and we can confidently do that. But most of the time, if there is some kind of a head and shoulders formation, it's almost like a no-brainer to go for the left shoulder. Of course, if you're extremely adventurous and you're using multiple lots, it is highly possible to even go for a full recovery, but it will definitely take time. That could take like a day or 2 days sometimes, and it depends. If you use an indicator like this, which is the CM Super Guppy or the Super Guppy by Just Uncle in TradingView, this is an excellent way, because once we see the change from red to gray and from gray to green, we're safe. We know it's going to work out. All you really need is to eat the body of the fish, not the head and the tail. If you're trading in binary, you probably wonder like what kind of time frame to use. Notice that I'm using a 15-minute time frame, and I personally feel that 15-minute time frame is the best time frame to use for trading price manipulations in gold. 15 or 5 minute, these are the best time frames to really observe it. But if you were to trade it, what kind of expiry, how many candles do you want to take? Well, it's going to be a lot. As a general rule of thumb, expect the motion to come back in about the same amount of time as it took to come down. You probably have a early retrace of 38.2 or 50% within the same amount of time that it took to drop. So if it took 5 bars coming down, in 5 bars going up, that will be your best bet. If you're doing it in Forex, there's one thing else that can possibly happen, and that is the unexpected unwanted movement. In binary options, it is all or nothing. In Forex, on the other hand, well, sometimes depending on the size of your account, you could be risking margin in this case. The way to handle it is to use hedging. Hedging is a great way to enter the trade. For example, if you accidentally went in here instead of here, what you do is that you put in a trade in the opposite direction. So if you have a call over here, you put in a put over here, and that basically locks in a small amount of loss. The key for that is, well, you can actually profit on that by putting like a take profit of about like 300 points, and that'll help you to lock in a profit, and at the same time extending the margin for you to be able to hold on longer in the trade. But that's what the hedge is used for. The other easier way of using the hedge, if you don't want to take a profit on it, you find that that's so scary, okay, no problem. So simply let it go down and come back up to the same price that you entered. Once it's done, take off the hedge and let it fly up. That's an easier way of using the hedge. So this is one of the things that you can't really apply to other asset classes as much as you can in gold, because gold has a lot of potential in this respect. And for those who are trading Forex, you can actually get like binary level return in gold because of the amount of movement. There are some people out there who wish to trade gold on Forex account, but maybe because you do not have the amount of funds to safely trade it, what's going to be a benefit to you is to use a broker that has a gold mini contract, like XAUUSDm, or sometimes it's called a gold mini. That's going to help you to get into these trades much more safely, and then you don't have to take too big risk in order to get a good gain. And you will be surprised to find out that if you trade gold mini, the exposure is even less than your typical Euro USD or USD JPY. Moving forward, I know it's been a huge amount of time that you've seen any content on this channel. If you like this content, give it a thumbs up, share it. And moving forward, I also wanted to mention I wish to be making content in various respects, not just in trading or Forex and binary, but just about anything that is opportunity. And on top of that, personal finance level in a very general scale. Because I feel that with so many opportunity, the only way to take full advantage of everything is to have a solid financial plan. So the content moving forward is going to be very, very diversified. And if you are excited for that, leave a comment beneath this video. Thanks for watching.